The Fed plans to reset the housing market. Home sales post a rare decline in May. Housing competition dropped to a 15-month low. A housing crash is imminent, but with lagging data, when will the housing market respond to recent rate hikes? Hello, ladies and gentlemen. I hope you're all doing well. Welcome to the channel. Today we're going to cover breaking news from Redfin, Yahoo Finance, and much more. There's so much information to unpack here. Thank you so much for tuning in. One caveat, I'm a Florida, Georgia real estate broker, not a financial advisor. All right, let's begin. The Fed plans to reset the housing market, raising the likelihood of falling home prices. It's not just about how expensive housing became, it's how fast it got there. It only took 24 months for U.S. home prices to soar a staggering 37%. For comparison, the biggest two-year spike leading into the 2008 housing crash was 29%. Heading into this spring, the Federal Reserve decided it had seen enough. The central bank quickly raised interest rates, which saw the average 30-year fixed mortgage rate climb to 6%, up from 3.2% at the start of the year. Powell says homebuyers need a bit of a reset. It's clear that Powell hopes the housing cooldown caused by rising mortgage rates will help to push inventory levels up. Powell suggests it'll help buyers, the thinking being, when shoppers restart their house hunt, they'll be met with a friendlier market. Higher inventory levels would give buyers more time to decide and reduce the chance they'll have to engage in a bidding war. Falling home prices? Powell seems to have suggested it's possible. Fed Chair Powell raised the hypothetical of home price drops on Wednesday. How much will it affect housing prices? Not really sure. Obviously, we are watching that quite carefully. You'd think over time, there's a tremendous amount of supply in the housing market of unfinished homes, and as those come online, he then pivoted and said, whereas the supply of finished homes, inventory of finished homes for sale is incredibly low, historically low. It's still a very tight market, and prices might keep going up for a while, even in a world where rates are up. So it's a complicated situation, and we watch it very carefully. For a moment, it sounded like Powell was about to say home prices would fall. Regardless, Powell didn't rule out falling home prices. And it goes on to say, why are home prices now susceptible to a decline? It starts with the fact that home prices have become detached from underlying economic fundamentals. Basic economic theory teaches that home price growth and income growth are interwoven, and neither can outrun the other for long. That affordability crunch has only worsened by soaring mortgage rates. In fact, over the past 6 months, the typical new mortgage payment has spiked 52%, according to Zonda, a real estate analytics company. Powell explicitly said he'd like to see mortgage rates fall. The central bank raised interest rates to both halt the pandemic housing boom and to rein in on runaway inflation. Once the Fed has inflation back under control, elevated mortgage rates could begin to recede. That said, home shoppers eager for mortgage rate relief might be waiting for a while. As of the last week, the Consumer Price Index was at 8.6%. The Fed won't let up on inflation fighting until the CPI returns to 2%. On Thursday, the Fed made it clear this fight could last well into 2024. The Fed will rarely disclose its true motives, and words such as recession are forbidden in forward guidance. Thankfully, we have a few former Fed governors who are more candid about the Federal Reserve Bank's monetary policy. Former New York Federal Reserve Governor Bill Dudley stated last month that the Fed must tighten financial conditions to slow the economy down, creating a reverse wealth effect in order to fight inflation. Simply put, the Fed is going after the housing and stock market. And we have breaking news from Redfin. Home sales post rare May decline as mortgage rates rise. Home prices rose 1.5% month over month in May, their smallest increase of any May in Redfin's record, which goes back to 2012. The housing market cooled considerably as mortgage rates climbed to their highest level since 2009. Seasonally adjusted home sales fell 3% month over month, their only May decline on record outside of 2020, when the start of the pandemic sent shockwaves through the housing market. Despite this decline in demand, the inventory of homes for sale still fell from a year earlier. As the market remains tight and new listings also decline, May saw the smallest drop in active listings since November 2019. Keep in mind, Redfin Data is lagging as it pertains to closed sales in May. Those recorded contracts were procured as early as March and April when interest rates were much lower than they are at present. We will not know the true ramifications of 6% interest rates until at least July or August. By then, we can expect interest rates to be even higher. Housing market competition dropped to a 15-month low in May. Nationwide, 57.8% of home offers written by Redfin agents face competition on a seasonally adjusted basis in May, the lowest level since February 2021. That's down from a revised rate of 60.9% 1 month earlier and a pandemic peak of 68.8% 1 year earlier, and marks the fourth consecutive monthly decline. On a non-adjusted basis, May's bidding war rate was 60.8%, down from 67.8% in April and 71.8% in May 2021. What this means is competition in May was significantly less on a percentage basis than the previous month and year. Redfin's data is a lagging indicator and does not account for the recent 75 basis point rate hike to the federal funds rate. Moreover, the Federal Reserve Governor Christopher Waller stated he supports a possible 75 basis point rate hike in July to tame inflation. Such a hike will ultimately shock the housing market. Housing crash imminent as mortgage rates explode, price cuts soar, and buyer demand collapses. In the Austin, Texas, and Nashville, Tennessee metro areas, the share of new construction offerings with price cuts had quadrupled from a year earlier, according to Redfin. They tripled in Phoenix and doubled in Tampa, Florida region. We are in a different place. The builder can no longer name a price and say, pay it or move along, said Nicole Freer, a Houston agent who has slashed prices by $2,000 to $20,000 on homes she listed for builders. They're telling us our managers have allowed us to negotiate again. Still, despite the clear cracks in housing, home buying has never been more expensive. Due to delays in pricing, the typical buyer with a 30-year fixed-rate mortgage is looking at a monthly payment of $2,514, up from $1,692 a year ago. When do you think the housing market will respond to recent rate hikes? Let us know in the comments. Okay, so today's takeaway. The housing market cooled considerably as mortgage rates climbed to their highest level since 2009. Nationwide, 57.8% of home offers written by Redfin agents faced competition on a seasonally adjusted basis in May, the lowest level since February 2021. As Jay Powell puts it, we are well aware that mortgage rates have moved up a lot, and you are seeing a changing housing market. Finally, Jay Powell didn't rule out falling home prices. However, falling home prices are already on their way, but the market doesn't seem to know it yet. Get ready. If you like this video, please consider subscribing to the channel and hit that like button. I'm a Florida, Georgia real estate broker, not a financial advisor. Thanks again, and we'll see you in the next video.